You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.
Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody, that music means we are back. It is Thursday. It is 1:30 p.m. Central. It is 2:30 p.m. Eastern. You know what's going on in the world of futures options. Well, let's find out together, shall we? It is time once again for TWIFO, This Week in Futures Options. My name, of course, Mark Longo from theoptionsinsider.com. Reminding you, make sure you're checking out the full network wherever you're getting your favorite podcast. Otherwise, you're missing out on shows like the Futures Rundown, kind of the other side, the yin to the yang of TWIFO out there. You got to listen to both. And then, of course, if you're ready to pull the trigger, theoptionsinsider.com/pro, the place to go to learn about all the fun on the pro. We've got live streams. We've got giveaways coming up tomorrow. Last day to get your name in the hat for the October Pro Trading Crate. All sorts of trading talk throughout the week. Fun chat. We had awesome Pro Q&A earlier this week, if I do say so myself, as well as oddities coming up tomorrow after Vol Views. All sorts of fun. It's kind of the official after party of Volatility Views. Where can you get all that fun stuff and more? theoptionsinsider.com/pro fantasy football, of which our guest today on the show is a participant and doing quite well out there. Of course, we are joined once again by our good friend, Miss Carly Garner from DeCarley Trading, a.k.a. the fantasy football pro extraordinaire. Carly, welcome back to TWIFO, madam.
Hey, thanks, Mark, for having me. You are being way too generous regarding my fantasy experience, but we're trying over here.
I think you and I had a dust up early in the season. We're probably fixing for a rematch. You're probably spoiling for that, so I'm sure your team has been on a bit of a streak right now. I had a rough run, I think, 2 weeks ago, but then I came back and avenged it last week. So I'm feeling pretty good. I think I'm hanging out 6-2 on the season, so I'm not too mad at that out there, especially as I'm doing in some of my other leagues. The Insider League is looking pretty good.
No, you're doing great.
So yes, the football gods are smiling upon me. Are the market gods smiling on all of us? Well, let's find out. It is time for the Movers and Shakers Report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everybody, welcome to the Movers and Shakers Report, the portion of the show where we break down what's lighting it up to the light side and to the dark side over there at CME Group this week. And if you look at our chart out there, listeners, on the week, if you look at the full array of products out there at CME Group, you would see we are biased, I would say 65-35, maybe 70-30. To the red this week, even though the largest percentage mover is to the upside out there, listeners. So interesting stuff. But that said, Carly, I know you just got all the info like a few minutes ago. So if you don't feel up to the movers and shakers report, I will understand. But you feel like a little bit of light side and dark side wrangling for the folks this week?
Sure, I do. I think I can handle it. I think we got it.
You can handle the fantasy football gridiron. You can handle this, Matt.
Of course. All right, let's start with the light side, which is actually quite interesting. A lot of it's due to the Chinese U.S. trade deal news, but number 5, we have RBOB up 3.74%, and number 4 is soybeans up 4.52%. Again, Chinese trade deal news. And then we have the technology sector up 4.57%, soybean meal, benefits of China deal, up 7.9%. I should say anticipation of a China deal, not an actual deal. On number 1 on the list is natural gas, up 17.37%. Unfortunately, last I checked my chart, we'd given some of that back, but still, I still think natural gas has some upside. Now to the dark side, a little more gloomy. Number 5, consumer staples, down 3.39%. And then number 4 is real estate, down 3.76%. Number 3 is feeder cattle, down 4.42%. Mind you, this is after feeder cattle went parabolic for a couple of weeks before doing this, so lots of fun over there. Oats down 7.64% for number 2, and then number 1 is lumber, down 7.78%.
Wild stuff out there. As you mentioned, the Chinese deal, at least the hints of it being felt to that upside. I think soybeans really the only product outside of fentanyl really being named by name in the Chinese trade deal talk. So soybeans clearly getting the lift just on the hints. And yeah, the farmers out there certainly needed it. China, a big consumer of our soybeans out there. But now to the world of vol. What is moving and shaking on the vol front this week, listeners? You can find out for yourselves. Just type CME and CVOL, CVOL, into any browser you're rocking out there. That will get you to the CVOL dashboard. If you haven't created one, you'll need to create a CME account. Takes 20 seconds. It's all free. And then you get access to all this cool data. If you want to line up with the show, we go to the 1 week range on the high-low range. And then we go to the aggregates tab. You could spend all the time you want in all the other complexes. We don't judge. Got a limited time here on the show, so we're going straight to the aggregates. And this week, it's mostly a downside to mixed bag with one notable exception. I wonder if you can guess which complex that is from what we were just talking about. But let's kick things off in the metals this week. Metals hanging out one of the few kind of middle of the range vol products this week. Metals CVOL 26 and about a third, up nearly half a point today. So gaining a little bit of juice back today. The low was 25.17 set earlier this week. The high 28.37. Now, bear in mind, this was Fed weeks. If you're saying, wow, it's kind of wild to have such a wide range on metals vol, you are right. Not known to be a bastion of volatility out there, but China also has impact on the metals side as well in terms of the base stuff like copper. So there's a lot of things going on out there that could drive a little bit of metals vol. And we're hanging out right in the middle of that range right now, listeners. To FX we go. Again, trade deals in the works, so that usually has some reverberations on the FX front as well. FX vol right now, pretty anemic, 6 3/4, up about 0.12 today, so getting a little bit back today. On the week, it's had a range of 6.57 to the downside, 7.05 to the upside, so another product that's kind of hanging out in the middle of its weekly range. Then we start trending lower. Let's go to the treasuries first. Treasury vol, I mean, talk about anemic. You thought 6 3/4 was low. How about 4 1/4 on the treasury vol this week, listeners? Off 0.05 today. Again, we did have kind of the big event risk in the treasury complex earlier this week, so that's going to siphon out what little juice is left out there. The low was actually 4.14, so we are slightly off the lows, but still at the low end of the range pretty much for the week. The high 4.61. So treasury vol not having much left to give and still giving up half a point out there this week. So at a certain point, it's kind of just academic. Then we go down to the one product complex that is pinning the needle to the upside this week. Can you guess which one it is? Hint, we talked about it on the upside on the movers and shakers. Yes, it's the ags. Getting a little bit of a lift on the vol front. 21.75 right now. That's almost at the high for the week. The high was actually yesterday, 22 1/4. So they're off half a point today, but still pretty much pinning the needle to the upside for the week. The low 18, pretty much exactly. So it had a 4.25 point range. That's a pretty spicy week on the ag front. Again, a lot of that, the ripple effects of all these trade talks out here, but a lot of juice. And again, very much the outlier on our vol report for the week because the rest of them taking it on the chin. Let's go to commodities right now. 36.18 is where the aggregate commodity C-vols hanging out at the start of the show. Off about 0.6 point today. That is the low print for the week. The high 37.68, so coming in 1.5 points on the week. Below it, we have the Treasury yield vol. Usually a spicy number, but coming back to earth a little bit as well. Only hanging out a little bit north of 80 right now. We've seen it north of triple digits not too long ago. Off 1.25 points today. The range on the week, 91.63 was the high, and the low was pretty much today's print. So coming in about 11 points, 11.5 points actually on the week. So they are coming for Treasury vol across the board. And at the bottom of our list is our old pal, the Energy C-vol. 53.36 right now, off 2 points today. So they're coming for Energy vol for the latter half of the week. Looking at the trends here, which you can also see on the C-vol dashboard, listeners. The first 2 days of the week, they were pricing up vol. The last 3 days, they've been coming for it here. So a kind of interesting out here. 53.33 is your low for the week. The high, 56.92. So Energy vol coming crashing back to earth as well. But Carly, a lot going on in the markets this week. We were just talking soybeans. They are certainly lighting up our movers and shakers. We also have your old pal / nemesis, nat gas, taking the top spot this week, or perhaps there's something else catching your eye. Where should we begin our journey this week?
You know what? There's nothing boring going on in the metals. The metals have been moving.
All right.
Let's take a look.
I thought we were going to escape the metals this week because there are no metals in our movers and shakers. But you know what? There is no escaping the metals these days, Carly.
Werewolves beware. It's time to explore the options activity in silver, gold, and other shiny things. It's time to talk metals.
All right, everyone, welcome to the metals. You know where to go to find these reports for yourselves. CMEgroup.com/TWIFO, TWIFO, TWIO should also work. Once you're there, go into that drop down. You're going to go into the asset class, go all the way down to the bottom of the list to the metals. And then we're going to hang out in precious. Maybe we'll take a sojourn into base if Carly's feeling like it as well. But we'll kick it off. Let's go to the big dog. Let's go to gold because gold is kind of inescapable. Silver, also pretty active out there as well. Gold back off its lofty highs it set not too long ago. It seemed like for a little while there, maybe we're going to blow through 4,500 to the upside. Who knew? It seemed like there was no end to the upside. Coming back to earth a little bit this week, off 111 handles, a little bit north of 4,000, right around 40.25 when we kicked off the show. That puts it off about 2.7% just since Monday. Of course, if you go back to the end of our show last week, that's a little bit of a different story. I'll have to see. There's so many names in this chart. I'll have to do a little digging to see if I can find how much gold is off net on the week. But nonetheless, it has been delivering on the volume front as well. Usually 200 to 250 is what we expect on a given week in gold. Options already closing in on 350,000. So still feeling the afterglow of these recent highs on the volume front. And sure enough, maybe if we break 4,000 again to the dark side, might see some more paper kicking in there as well. So a lot to unpack here, Carly. Again, metals kind of inescapable in these markets right now. What is catching your eye in the king of the shiny stuff, aka gold?
Right. Well, for starters, I've been on this show and been relatively bearish gold, and obviously I was proven wrong in the last this last rally. There's a lot of things going on in gold, a lot of explanations to why we did what we did, but a lot of it is just a lot of liquidity in the system. Speculators targeted metals, and there we go. But what's interesting is volatility got up to roughly the 30-ish, and we've only seen that 2 other times in the last 25 years. So this has just been a really unusual market, obviously. If you would have talked to me a month ago, I'd say we're probably repeating 2011. I actually think, I was a little off. I think we're repeating 1979. And if you recall, 1979, we blew off top. It was insanely volatile, just like it is now. And then we retreated and traded sideways, went into a bear market for 20 years. So although I was wrong on this last hurrah on gold and, got my butt kicked, I'll be 100% honest, it was not an enjoyable experience. I do think that the ultimate end game is going to be the same. So be very careful. The volatility is going to continue on both sides. I probably think it's a short-term rally from here, but in the end, we could very easily give back all this rally plus a little more. The low 2000s are not impossible, not immediately, but at some point in the next couple of years, those prices probably will be seen. So just beware. No easy money in this stuff. We all know that.
Carly, you weren't wrong. You were just early. You were ahead of the sell-off. That's all.
I was really early, yeah.
You were talking about this week. You weren't talking about last week or the week before. That's all. You're just early.
True.
You just wanted people to get ahead of the move. That's all.
Of course.
They wanted them to trade the 4,000 strike in both directions. You were generous.
Exactly.
Generous in your gifts out there. But you're right. This has been just an absolutely wild run. I mean, I was saying myself, I thought when we were talking not too long ago on the show, month and a half ago, we were talking about D's 4,000 calls going up for fairly lofty premiums. We thought maybe by the end of the year, 4,000, that was potentially doable given the rate, but not much sooner than that. No, we were wrong there as well. 4,000 came a week or two later. So I don't think anyone had the 50+% rally for the king of the precious and shiny stuff in their back pocket this week. If you did, or this year, I should say, if you did, then ballyhoo to you, listeners. It was a wild time. And even in the last few weeks, just a lot more wild stuff afoot out there. Will this keep up? Are you still long the gold train, listeners? Are you starting to feel what Carly's putting down, that maybe we are in a bit of a frothy, speculative bubble and maybe gold going to retreat a little bit out? That might be a fun question of the week as well. Nothing gets the folks riled up, Carly, like putting out a question of the week that dares to potentially inspire bearish activity in gold. They'll love that.
Well, what I can say, in our quest to adjust our horribly positioned trades, we were able to roll out some of our short call premium into like April 5,000 calls for well over 10 grand a piece. Just think about that for a while. People were out there spending 10 to 15 grand on call options, almost $1,000, $600, $700, $800 out of the money. That is insane.
I like it. April 5,000s. I would probably sell those. Then again, I might have sold the D's 4,000s this year as well, and that would have come back to bite me. So, good thing I did not. But April. I think we can all take a nibble on those out here, listeners. Let's see what folks are nibbling on out here this week. And I will admit, Carly, this is one of the reasons I love doing this show anyway. But every once in a while, some fun stuff comes to light. That makes it even more special because we're talking gold. Gold usually hangs out in D's. No matter what time of year it is, the gold bugs love to play at the end of the year. It's kind of just where their interests line up, apparently. And that is the case again this week. Even on a pretty active week in gold options, nearly half, about 43% of the paper is still going up in the D's contract. These days, it's kind of near dated, only about 25 days to go. The vol in D's gold, in case you're wondering, about 22.40 off, about 0.15 this week. So not a huge change in gold vol this week, even though we did see a lot of evolution on the metals C-vol. So obviously some other metals are contributing to that. Skew-wise, we're still seeing the same skew we normally expect in the metals, slight bid to the upside, slight discount to the downside, maybe exacerbated a little bit this week. So maybe showing that maybe around this 4,000 level, perhaps there is a bit of an inflection point, which would make some sense. It is an important and indeed pivotal psychological level. Last week, the puts were 2.1% cheap. This week, about 4% cheap, so getting cheaper. The calls, 4% bid last week, 4.3% bid this week, so getting slightly more bid out there. Some of that could also be just the impact of the sell-off, listeners. That's how skew tends to rotate around the at-the-money strike. But Carly, what caught my eye, I was looking at where we're hanging out. We're hanging out around the 4,000, so I thought maybe D's 4,000 puts. Maybe some, 4,100, 4,200 calls to the upside if the gold bugs are coming to play. Maybe 4,500s if things are getting wild. But none of that, Carly. I did not have on my bingo card this week the number one most active gold option are the D's 2,600s, Carly.
Ooh, that's spicy.
2,600s. Yeah. I love it. I don't know why that is the strike du jour out there. I mean, even if you're doing a underlying substitution, I don't think you're going to go that far in the money. You're pretty much just cutting your capital allocation in half. I don't know if that really makes a lot of sense from a capital perspective. But somebody's loving the 2600s, Carly. They've been trading a lot, including today. Nearly 3,000 trading today, about 3,000 on Tuesday, and about 1,000 on Monday. So this has obviously been the strike of the week here, Carly. Worth noting, I did a little digging while you were talking. It looks like it's more of a vertical and indeed a call fly. So for whatever reason, this 2600 strike is hot in a variety of different configurations. There was a 24.5 2600 call spread that went up today. If you're wondering what that trades for, it's a $150 deep in the money call spread. It's going to trade for $150. So obviously, somebody looking to move a little capital around. We also got the D's 2500 2600 call spread, also going up for $100. So we got effectively what are almost synonymous to boxes here. And then weird deep in the money call flies, 2595 2600 2605 call flies, trading for 20 cents. So we got all sorts of weird and wild paper, all fixated around the 2600 strike for some reason. So kind of weird stuff. If you take that little bit of an outlier out of the equation, listeners, and it's a pretty big outlier, but it's a weird one, we get a little bit more relevant paper, and it's not actually the downside puts that are lighting it up. It's the 42 halves. So still a decent amount of upside trading out here this week. Looks like about 7,200 of these 42 halves, again, expiring in just a couple of weeks. So can we get back to those levels? 5,300 contracts going up on Tuesday, mostly opening there. So that was the big dog out there in terms of action out there. Let's see if I could find a print. These are not, these are the 4,200s were trading for $32 earlier today. I don't see a print. I'll have to dig a little bit for the 42 halves. There was a vertical going up as well. 42 half, 4,500 listeners. That traded pretty actively today as well. All in December. If you're wondering what that's going for, $13.80. So we're trading around that strike in a wide variety of ways out here. And then below it, we have maybe a little bit closer upside. 4,200s trading about 6,200 times this week. A lot of this on Tuesday. So interestingly enough, this is all pre-Fed paper, not a lot of post-Fed paper on any of this. So it could have been straight up upside speculation. Maybe the Fed was going to surprise a lot of people and spark another rally in gold, and that did not come to pass. And maybe this paper is going the way of the dodo now. But either way, a lot of it lining up to the upside. Carly, I'm guessing, given what you said earlier, you're not a huge fan of the 42 halves or the 4,200s loading up to the upside ahead of the Fed this week.
Nope, that's not. We've been covering our butts this week is what we're doing. So just to comment on those 2,600 puts, the only people that are going to make money on those are the broker. We only have 25 days to expiration. Maybe it's a key punch error. Somebody thought they were 3,600 puts. I don't know, but that's pretty wild. In our situation, actually, what I think is going to happen is we had this massive explosion in volatility. Once, as I mentioned, we've only seen 2 other times in the last 2 decades. So this is pretty rare, and volatility is usually temporary. It usually blows everybody out on the upside, blows everyone out on the downside, which is exactly what we saw. And then it settles in the middle. And I think that's what we're going to do, what we're probably doing. So, I mean, just to kind of give you a full disclosure, this is not a recommendation, but what we've been doing is we had some short 4,000 calls, which were not in a great place to be. We hedged them out with micro futures. We survived in most cases. A few people ran out of margin, which was unfortunate. But now we've sold 4,000 puts. So we're short 4,000 calls, 4,000 puts, with about 18,000 in premium collected or premium out there, which is totally insane to even say that for 25 days to go. So wild times. That's all I can say.
You're legging into a short iron fly. That's what you were doing this whole time, Carly.
Right.
But yeah, you're short that straddle now.
I knew what I was doing.
It's a wild straddle. You just waiting for the market to come to you. That's all. You don't go to the market. The market comes to you, Carly.
Exactly.
Let's keep it in precious for a second. Let's talk silver as well. Our good buddy on the network, Mr. Uncle Mike, is one of the bigger silver bulls that I know. He's been talking silver for years. Getting the rally he's been waiting for this year. Obviously, silver on the futures rundown, it's actually outpacing gold this year. I think it's somewhere around number 2 or number 3 in terms of upside movers this year. So silver making up for lost time out there this year. Coming in to start of the show today, a 48.70, up only about a tenth of a point since Monday, so a little bit quieter this week. Silver not feeling the whiplash, perhaps, of the Fed that gold was. But either way, putting up some numbers this week, about 52,000 contracts. That's decent volume for silver, maybe slightly more than expected this time of the week, but not the banger record numbers out here we've been seeing. Carly, I have a feeling if you're bearish on gold, you're probably a little bearish on silver as well, but perhaps you're going to surprise me. What are your thoughts on silver these days?
No surprises here. I personally, I mean, I'll be, obviously, I didn't expect silver to get quite to 50. I thought that was a bit of a pipe dream. It got here, just like gold kind of blew off the rails with the rally. But I'll just say this. In my opinion, silver is a really awful market for both speculation and investing, right? We've seen $50 3 times in history. It's never held any of those gains ever, not even close. And if you're trying to speculate in the short run, it's just kind of a herky-jerky market. The options are too thin because, in my opinion, there's too many strike prices listed. It spreads everything out. They're just really difficult to trade. So I really almost never would even touch silver. So take my advice with a grain of salt. But I would say if you made money on the way up, make sure you keep it. I've never seen it. I've seen people make a lot of money in silver. I can't recall one single person ever keeping it. So if you made money, please keep it. Protect yourself.
Silver is for buying, not for selling, Carly. You buy it. Maybe you buy some ingots. Maybe you buy, take grandma's old jewelry. You put it in the attic or the safety deposit box. You never sell it, Carly. It's just for
exactly.
It's a hoarding asset.
Apparently, yes.
Let's see what the folks are up to hoarding this week, listeners. Again, it's December taking the lion's share of the flow. That's just the way precious metals like to trade. Vol in December silver, obviously a little bit spicier than what we're seeing in gold. 33.4, off about a little over a point and 2/3 this week. So again, coming back to earth a little bit out there in silver vol land, at least in December. Skew-wise, looking pretty similar to what we saw last week. So the Fed having little to no impact on silver skew in either direction. The calls were 9% bid last week, 8.9% bid this week. The puts 5% discounted last week, 5.2. So the skew hasn't budged in December. They're like, Fed Schmed. We don't really care. And it's the double calls. By the way, in December future, we're hanging out a little bit shy of a 50, about a 48.70. And it's the double calls, the 55 calls that are leading the dance out here in December this week with about 1,700 contracts on the tape. The big day was Fed Day, Wednesday, almost 1,000 going up on that day. Looks like mostly closing, so maybe some folks were feeling their oats and they got the heck out of Dodge once they heard what the Fed had to say. So maybe a little bit of an inverse of the gold trade. Seems like a lot of the gold options trade was maybe speculative upside the day before the Fed, and looks like silver was a lot of folks bailing the day of the Fed or right after the Fed announcement. We saw about 500 of the 50s trading that day as well, mostly closing. So maybe some folks giving up the ghost for the near term here in silver. Because if past is prologue, folks are probably long that upside. You don't usually see a lot of overwriting in the metals. That's why these skews are so bid to the upside. So if they're closing, it's probably folks bailing on that upside. And again, given what we heard out of the Fed, I could maybe see an argument for that. Again, total about 1,700 at 55s and about 1,200 of the 50s have traded this week, with a lot of that going on Wednesday post-Fed day. Not a heck of a lot going up today out there. Unless you're looking at 40 puts. 40 puts are lighting up the tape today in silver. They've done about 1,600 contracts this week. 13, almost 1,400 of that today. So somebody is feeling their oats out here in the 40 puts. Let's go look really quickly. Let's see if we can pull up a little bit of Globex action to see if we can find what these 40 puts in silver are going for right now. Listen, the D's 40 put, if you had to guess, listeners, again, we're hanging out a wee bit higher than that right now in silver. So you can get all you want of the 40 puts for 6 cents. Now, worth noting, there is OI on this strike. There's about 3,300 contracts, so maybe someone's deciding to take their 6 cents, what's left of it, and get the heck out of Dodge. That probably would be the sane play. I don't know if you want to roll the bones on a 6 cent flyer to the downside. But then again, if Carly's prediction comes to pass, we get a little bit of a metals apocalypse out here, then maybe 40 puts for not even a nickel, 6 cents maybe that could be your huckleberry. Carly, are you feeling that much downside in silver over the next month? You gonna take a little bit of a nibble on these 40 puts for 6 cents, madam?
That's not for me. I mean, 25 days, a lot can happen in 25 days. I'm not sure $9 in silver can happen, but it could. It's not impossible. That said, I think we're same as with gold. I think we're in store for a volatility crush. It's just not as easy. Trading just isn't as easy as buying puts when we blow out to the upside or vice versa. I suspect now that we've kind of blown everyone out on both sides, we stabilize, run the option premium down, and leave everybody holding the bag. Unfortunately, markets are mean. That's what happens.
Yeah, 40 puts might be a bit of a bridge too far. How about the 45 puts for 50 cents? A little bit closer in December, Carly. Maybe that's more your huckleberry. Then again, if we're looking at a vol crush, it might be hard to make those pay off. So I don't know if long premium is your friend there, but do those float your boat anymore, Carly?
They don't. I wouldn't, again, I'm not a silver trader. I wouldn't touch it, but metals in general, I think it's a place to sell vol, not buy it at this point. That's not for everyone. I'm not recommending that. In fact, anyone that's had short vol in the last few weeks is probably probably not had a good, I'll just leave this, probably had some sleepless nights. So no easy money anywhere, but the goal of option trading is buy when vol is low, sell when vol is high. So if you got the margin, you have the guts, and you protect yourself as best you can, you might do okay being a seller, not a buyer.
Says the woman who short straddles in gold right now. I love it. You talk the talk and you walk the walk, Carly. You put your money where your mouth is, quite literally. She says sell vol. She's short at the money, 4,000 straddles in gold. Right? Do you have the cojones to do that, listeners? Carly does, which is always fun.
It's I'll tell you, it's not an easy life for
no,
sure.
I think you're earning your theta decay there, Carly, with some Tums and maybe a little bit of sleepless nights out there. You know, it doesn't count. I found if you're collecting decay, it doesn't count unless you sweat for it a little bit. If you just sell the put or whatever and it goes out, you're like, but if you sweat it down to the wire, Carly, then you feel like you earned that money.
That's exactly right. And I know I'm in trouble when I sleep with my laptop in the bathroom at night with alerts on.
I love it. I love it. I used to always be able to tell the guys back on the trading floor on expiration day, back when expiration day was once a month. Remember that, Carly? And you'd roll on expiration morning and you could instantly tell who was short just a gazillion options and who was long, because the guys who were short were sweating through their jackets before the bell even rang. They were popping Tums. They were watching every tick of the stock, and you could just tell. And the guys who were long, they kind of had a good day. So those guys who were short could have made a decent amount of money, but they paid for it in sweat equity, and you're doing a little bit of that right now. But that's what the clients are paying for you, Carly. They're paying for you to not sleep so they can.
I guess so.
There you go. Let's keep rolling really quickly. Let's keep it in the metals for 2 seconds, because we were just talking about China and all of its impact on soybeans, and maybe we'll get there a little bit later in the show. But the other side of the Chinese equation has always been the other C metal, which is, of course, copper. China, very much a byword for copper demand. They buy a lot of it for a variety of uses over there. So wither the Chinese economy, so goes copper. And we're seeing copper coming into the start of the show this week looking pretty active. Again, copper options, Carly. It wasn't that long ago. Copper options were kind of a bit of an also-ran. They do a little bit of flow, but nothing crazy. Copper doing nearly 2x silver this week, almost 100,000 contracts on the tape. So for all the headlines that silver gets, from an options perspective, copper is beating the pants off it. Copper hanging out right now, 510, kind of unched on the week, which is kind of interesting out here. Again, maybe some folks playing a little bit of wait and see game when it comes to what China says versus what they do on that front out there. And of course, what that means for the long-term prospects for copper. But interesting to see so much flow going up out here in copper options this week. And once again, like all metals, it's all D's all the time. 78% of that nearly 100,000 contracts going up in the D's contract. So copper, if anything, even more D's concentrated than the shiny stuff. What is copper vol? You might be wondering, by the way, hanging out at about a 510 in that D's future. The vol, 27 1/3, up 2 1/3 points, which again is kind of interesting. We were just talking about metals vol hanging out kind of in the middle of its weekly range. And that's probably why we have, gold, we have silver giving up the ghost a little bit on the vol front. And then copper getting a little bit juicier on the vol front. So two contrasting forces there on the metals C-vol this week. Skew-wise, we had a pretty strong bid on the calls last week. That has been cut in half. They were 5.4% bid last week, 2.3% bid this week. So maybe some folks were hoping for maybe a little bit more upside coming out of the China talks than we got. The puts last week, 2.4% discounted. This week, almost exactly flat. So the puts catching a slight bid, which is kind of interesting. Calls coming in. So maybe some folks kind of underwhelmed by the news. But you know what? It's not leading to a cessation of volume. In fact, looks like we're getting a decent amount of action, in particular this week on the 530 calls in December. So again, about 20 cents out of the money calls going up nearly 20,000 times this week, about 18,500 times. Almost all of that today, Carly. So again, just showing how much of this is driven by the trade talks. Pretty much all of this paper for the week is today. 17,000 of the 18,500 contracts that traded this week have gone up today. By the way, it's an OI of about 9,000. So clearly opening paper today. If that's not enough for you, 5 3/4 calls. Wild. 5 3/4 calls going up 11,000 times today against an OI of less than 1,000. So opening paper there. And 545 calls going up 10,000, almost 11,000 times as well. So maybe we have a bit of a funky call fly. But either way, there is a metric ton of upside trading for Dees in copper right now. Let's just look really quickly to see if I could find what the heck is going up here on Globex for all of these funky strikes here, listeners. The 535s going up straight up by themselves for 6 cents today. 5 3/4. My goodness, they're trading for about 1 to 2 cents. Looks like we got some call verticals, but those are farther out on the term structure. I'll have to dig a little bit. Here we go. 530s trading for about 7 to 8 cents today, Carly. So do any of those call strikes float your boat in copper, Carly? 530, 5 3/4, or 545, Carly? It's wild stuff.
Yeah, I don't think I'd have any interest in buying those outright, but I'll just say a couple of things to go back to your volume comment. My book, Trading Commodity Options, The Creativity, came out 5 years ago. And in that book, I actually say, probably stay away from copper options. They're too thin. There's nothing going on there. And things have changed dramatically.
It's been a wild 5 years in copper.
It has. There used to really not be market makers. The bid-ask spreads were 2 or 3 cents. And I'm not kidding, like literally hundreds of dollars between the bid and the ask. But now they're very liquid, and it's actually a really awesome option market. So don't scratch it off your list. And if you read my book, forget that comment, because that's obsolete at this point. Copper is a great option market to trade. And we're banging up against a trend line that's really been intact for 20 years. Copper's had a pretty good habit of holding like $5, $5.20. This is the 4th time we've come up in this area in the last handful of years. Chances are, you knock on that door enough times, it's going to break through. It did break through earlier this year on the tariff news, and then it was temporary and it came right back. But I think we have a pretty good chance of breaking through. However, I wouldn't spend a fortune on calls, because this has failed for 20 years. You know what I mean? But you could put together some calls, butterflies, limited risk, and that way help the market finance your trade, and so hopefully you can get something. If we do break out here, there's really nothing stopping it until we get into the low 6s. So I think it's worth a butterfly, but I wouldn't buy calls on it.
Yeah, this is some wild flow. I'm trying to dig in to see what's exactly behind it. But you're right. That seems like a bit of a bridge to certainly the 5 3/4 by December. But hey, I said that about gold, and look how that turned out as well, Carly. And you know what that means, telling me about your chapter there. I think that means we're due for an updated edition. What do you think, Carly, of the book?
I'm starting to get lazy. I'm kind of old. It's it's a lot of work. Eventually I will, but right now I'm just kind of trying to survive.
At the very least, a new edition where you cut out the copper chapter. How about that?
I could rip that page out. You got it. That's a good idea.
But you're just illuminating my point for me that copper was not exactly the sexiest of products just a few years ago. So how everything has changed just in the last few years, Carly. We started the show talking about ags moving to the upside. Also, your beloved nat gas is lighting it up this week as well. We probably only have time for one more complex, Carly. So I'll let you choose. You want to go ags into the beans or to your beloved Widowmaker?
I'm okay with anything, but let's do ags. That's one getting all the headlines.
That is getting all the headlines. So listeners, to the ags we go.
It's time to get our hands dirty exploring the latest options, trades, and trends in corn, wheat, soybeans, and more. It's time to talk ags.
All right, listeners, let's get our hands dirty talking some ags. You know where to go for this one. Go into that cmegroup.com/TWIFO drop down. And then you're going to pop all the way from the bottom of the list where we were hanging out with the metals all the way to the top of the list. It is an alpha order list after all, to the ags. And then once you're there in product family, you know where we're going. We're not going to grains and oil seeds this week. We're skipping right past corn and we're going right past wheat. We're going straight to the heart of the trade deal, aka soybeans. Absolutely wild stuff going on out here this week. Weirdly enough, soybeans only number 4, Carly, being superseded by soybean meal. But we all know the soybeans complex is a wild one out there. Let's go to the big dog, which is the beans itself. Popping this week, trading 11.07 as we kicked off the show, up nearly 47 handles this week, or about 4.4%. And that's pretty much about how much they've moved since our show last week as well. So just showing pretty much all of that action in soybeans coming pretty much today and this week, which makes sense. Everyone's been waiting for a bit of a driver, some consensus on the Chinese trade war front, which is, of course, a big driver of soybean demand. In terms of action out here, man, Carly, they are not messing around in soybeans today or this week. I can't remember the last time that soybeans rivaled the E-mini or some of these other contracts we're talking about in terms of volume. Not quite 2 million, but pretty 1.11 million contracts already in soybeans, Carly. So I think the technical term is, my goodness, there's a lot of flow in soybeans this week. What's catching your eye?
There is, and honestly, it makes me a little nervous. We want speculators in futures and options on futures, but we want speculators that are informed on the product. So I have to kind of wonder what's going on here. But I'll say this: the last time we were in a trade war with China and Trump was in office, 2018, 2019, the soybean market basically traded sideways for those 2 years until it was about time for Trump to leave office. I think China is they're not in the business of buying soybeans; they're in the business of buying time. I think they're just trying to kick the road, appease everyone so that they can get to the next administration. That's what we saw the last time around. And what I mean by that is each and every one of the rallies that occurred on a potential Chinese trade deal or the thought of China buying soybeans from the U.S. again triggered a rally, but then it eventually just fizzled out and we gave it all back, maybe even plus some. So I think we're going to get a repeat of that. We've been trading in a range for a year and we kind of broke out of the top of that range, but I think it's a fake breakout. So we actually did come in long this week, calls, but we sold our calls and we're now buying puts in soybeans, thinking that this is just kind of a headline driven news situation. But I don't think, China bought some soybeans, but does that mean they're going to continue to buy beans? I question that. So I feel like we're probably going to give a lot of this back here in the next couple of weeks.
I'm glad you said that, Carly, because that lines up almost entirely with the flow we're seeing out here this week. So, Carly, you're ahead of the game as always. Just like you're legging into your short straddles in gold, you're you're a little ahead of the game. You're ahead of everybody else out here because we are seeing a lot of downside action in soybeans. We'll get there in a second. First, let's look at a little bit of vol right now in soybeans. Not surprisingly, we're looking juicy. By the way, it is January, not December, that is dominating the tape here in soybeans this week. But that said, it's about 42% of the flow, so it's a decent chunk. But DEES is not far behind at 33%. So you take DEES and you take Jan and add them together, you've got 75% pretty much of the flow out here, which again, 1.1 million contracts in the beans. I'm not a beans historian on the options side, but I'll have to go back and dig. But I have to imagine this is one of, if not the busiest weeks we've ever seen in soybeans options. Wild stuff out here. Vol-wise, 15 3/4, up a little over 2, about 2.1 points. So not surprising we're catching a vol bid right now. There's a lot of uncertainty in the soybeans market. If you're wondering, the DEES vol is actually a little bit spicier, about 16 3/4. So a 1 point premium right now between DEES and Jan on the term structure, which is kind of interesting. Maybe showing people are expecting maybe this turnaround to kick in earlier rather than later. There's 35 days between Jan and DEES. So you got a long duration, long spread there between the two, which is kind of interesting. Otherwise, skew-wise, they're not that dissimilar. The calls were 5.6% bid in DEES last week. This week, they're 6% bid. And actually, I take it back. In Jan last week, they were cheap. The calls were 6% discounted, and now they've swung completely in the other direction. They're about 7% bid. So a little bit, there was a wild skew. Something was going on in January in soybeans last week. The calls were 6% cheap. The puts 17.1% bid. So that to me screams like someone was lining up on the fact that we were not going to see any trade deal at all. A huge bid to the puts, discount to the calls. Kind of wild. Most of that is gone now. The calls have swung completely to the other direction, and the puts are only 3.9% discounted. They've swung 20 points in the other direction as well. So wild stuff in January. I'm not sure why specifically in January that we saw such a protracted bid pop up, because the puts were only about 2% discounted in December. So if you thought something was popping off this week, are you going to go out to Jan? Maybe. But wild stuff out here, listeners. And it is the downside, like Carly was saying, that is leading the dance out here this week. A whole bunch of puts in Jan dominating the tape out here, including the 1040 puts going up 40,000 times this week. So again, if you thought maybe there's a little, this upside dance is a little bit too much, or again, we're a little bit north of 1100 right now, you think we're looking for a pullback, then you are maybe not alone here. There is a ton of put paper going up here this week. Again, they traded 40,000 times almost exactly, 14,000 today, 13,000 yesterday, about 5,500 on Tuesday, and nearly 7,000 on Monday, opening all week long. Also seeing action on the 1120 call, so it's not all downside. 37,000 of the 1120s going up this week. The big day for those Wednesday, about 13,000. 10,000 today, 10,000 on Tuesday, and about 3,700. So opening on those as well. Then we have more puts, 1060 puts going up about 20,000 times this week. Doesn't seem like it lines up quite one-to-one with the 1040s unless we're talking Tuesday. We might have had a bit of a vertical on Tuesday. And since we're talking about action, let me just look here really quickly, see if I can suss out anything fun on the Globex side to see. Yeah, if you're wondering about these 1040 puts in Jan, listeners, they're trading for $6.17 right now. So if you're down for a little bit of that action, that's what you're trading them for right now. And the 1120s in Jan are trading for $19.39. That also makes some sense. Obviously, we're a lot closer to that strike. If you want to get a little bit closer to home, but a little bit closer to the fire as well, you can go for the 1060 puts in December. They've traded about 5,100 times already today for about $4.31 on average. So again, if you're looking for a pretty aggressive pullback out here, you only got a couple of weeks on these. 1030 puts in Dece also trading today for about $2, 5,000 plus times. 1090 puts for about nearly $15, about 14 3/4, 4,500 times. So Carly, it sounds like the market kind of lining up the way you're thinking, that this little bit of a pop is aggressively overdone, and they are sure putting a heck of a lot of volume where their mouth is, Carly. Any of these puts floating your boat?
Well, we've been focusing on January puts. Anything from 1060 to 1040 is the strike that I would probably look at. Again, not a recommendation, just throwing some ideas out there. If you buy the 1060, that's filling the gap that was left a few days ago on news of this deal. And so, I mean, to be fair, I know the vol is a little bit higher than what we've seen, but honestly, the options are still kind of cheap. Like you can buy for 10 to 15 cents. So 15 cents is $750. You can get in with an option that expires in a little less than 2 months and is close enough to do something if it happens. If this China thing falls apart, maybe we're wrong. I don't love the fact that everybody else is thinking the same thing, because that's usually the kiss of death.
That's the contrarian in you coming out. I like that. I feel the same way. I mean,
if it works and this rally comes back down, we're probably going to the trend line that's all the way down at about 1020. So, that'd be a pretty big move. It wouldn't happen immediately, but in the next couple of weeks, that's probably what we'd be looking at, assuming we're right about the premise.
Yeah, this is wild stuff out here. Maybe you're more versed in soybean options history than I. Can you recall another week, Carly, where we had this much flow going up?
Probably not volume-wise, no, but I've seen a heck of a lot more volatility. Obviously 2022, 2021, we had some massive vol. Vol. Probably not as much volume. I think the great thing about technology and broker dealers, and markets are a lot more accessible now than they have been at any other time in history. So there's a lot more people with access to the markets, and that's great. In most cases, it's great, but so yeah, I mean, I don't think I've ever seen quite that much volume going through bean options. No, I would say no.
I can tell you're getting a little uncomfortable. Everyone's lining up on your side of the trade. It's making you a little nervous. I get that way sometimes too. You're like, wait a minute. I don't want to be where everyone else is. I want to be in my own little party here. But you're right. It does seem like there's a lot of flow to the downside, Carly, in the beans coming up soon.
Well, most people lose trading commodities. I wish that wasn't true, but it is true. So
clearly, the old barriers that used to keep people from trading futures and options on futures, those are going the way of the dodo. I mean, 1.1 million contracts in soybean options. Clearly, this you're talking meme stock territory here, and and you're right. Volume-wise, or volatility-wise, I should say, it's not exactly spicy at all. I thought there'd be a little bit higher vol levels out here, quite frankly. So yeah, you're talking a sub 16. That's less than what we're seeing in VIX right now, listeners. So if you want to nibble on some premium, you could do worse than the beans right now. It's certainly, even after this move this week, is still not hyper-inflated. So yeah, I definitely can see why some folks are getting behind some potentially long premium trades. Unfortunately, Carly, that music means we've come to the end of our sojourn this week. We have a few seconds here at the end of the show, so if there's any complexes or products that are on your radar right now that we didn't have a chance to squeeze into the show that you want to touch on really quickly here at the end, have at it, madam. The floor is yours.
All right, I'll just make a very quick comment. So we've noticed, and probably everyone else on the planet's noticed, I'm not saying I'm smarter than everyone, but there's been a pretty reliable signal when Bitcoin usually makes a top or a bottom about 2 to 4 weeks before the stock market does. In other words, Bitcoin, for whatever reason, tends to be leading risk assets. And we've seen Bitcoin appear to have topped out a handful of weeks ago. And so I think the stock market might just continue that pattern and follow suit. So, it's hard to be bearish a stock market that just continually goes up no matter what the news is. But I think, there's a window of opportunity for the bears to capitalize on a little bit of a sell-off here. So I think we may get it.
There you go. Bitcoin leading the dance. So much for the uncorrelated asset class, Carly.
Exactly. And I mean, as an aside, calls have been overpriced and puts are pretty cheap. So if you have the risk tolerance, it might be a time to do some sort of risk reversal to protect your portfolio.
Yeah, certainly can do that in the equities. If they want to express it in Bitcoin directly as well, it's never been easier. You can obviously do it. I bet putting up nearly 1 million contracts a day these days, Carly. So the products like Bitcoin have never been more accessible on the options front than they are right now. So even though people are putting up 1 million contracts in soybean options, clearly folks don't have a problem trading options on futures. If that's still intimidating to you or you don't have the accounts for it yet, then clearly there are some other options, pun intended, out there. And Carly, if folks want to discuss their options, whether they be on futures or other products, where should they go? What should they do?
Well, we're a brokerage service. We are a boutique brokerage. You can find us at DeCarleyTrading.com. That's DeCarley trading.com. And if you're the type that already has your brokerage situation set up and you just want to see some of our market analysis, we have started a Substack. So search for DeCarley Perspective on Substack and you'll find us there.
Man, everyone's on Substack. I need to get on Substack. I'm feeling peer pressure, Carly. Your nemesis, Russell's been luring me. Dan, everyone I'm on the shows with these days, they all have Substacks, but me, Carly, because I'm too busy here talking to everybody day after day.
Yeah.
I don't have time to keep writing all these articles out here. But that said, Carly, our audience, our chat is down with your little bit of a soybean fade. A lot of them are saying they like that trade, even though a lot of them don't trade the beans, but they find it attractive. So there you go. You're luring a few more people to the dark side of soybeans, Carly. It's your fault they're putting up 1.1 million contracts in a week. It's because you're out there preaching the gospel of soybean downside out here. But either way, listeners, just an absolute banger of a week out here. Wild stuff in the metals and the beans, whether it's base metals or shiny stuff. And the beans obviously speak for themselves, these kind of numbers. These are absolutely wild out here. Have you gotten in on this beans frenzy? Maybe this show is the catalyst. If you do, hit us up. Let us know. And of course, you know where to go to check out all these reports. I mean, we just scratched the surface this week. There's so much going on in the world of futures and indeed futures options. And luckily for you, we give you all the data for free to check it out for yourselves. How many shows do that, I ask you? CMEgroup.com TWIFO, TWIFO. You can go there. You can check out crypto if you want. You could check out, obviously, the beans. A lot of people are checking them out right now. If you're slinging, if you're part of these 1.1 million contracts going up in the beans, and you're not at least glancing at these reports, what the heck are you doing? I guarantee you this is going to be better than 80 to 90% of what the brokers out there have to offer you in terms of analytics. This is really good stuff, and it's free. You can't beat the price. CMEgroup.com/TWIFO is the place to go to learn more. That's going to do it for us right now. Back again after the closing bell today to hold court on all of the madness going up in the options market this week. And then, of course, back again tomorrow with Carly's nemesis in life, Dr. Vix himself. He'll probably talk some smack about her tomorrow. I'll have to dial him back a little bit. But he'll be joining me on Vol Views tomorrow, as well as, of course, other special guests. Who's going to join us? You got to tune in to find out. And then, of course, for all the pro folks, Options Oddities coming up after Vol Views, the official after party of Volatility Views. And we're back to wrap it all up again with the Hot Options Report before we're back again next week. What complexes will take hold of the show next week? The way metals and ags are doing this week? You got to tune in to find out. See you next Thursday, another episode of This Week in Futures Options. Oh, yeah. And stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications.
You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.